All right. Hi, everybody. Thank you so much for coming and attending our webinar today. It's really exciting for us to have so much interest in what we're doing. And this is a great way for us to really get into some of the detail of what we've been doing in the past and what's coming up. So welcome to the Hiatus Fund webinar. My name is Jesse Russell. I'm the CEO of Hiatus Homes.
And I'm Ryan Andrews. I'm the CFO of the company. And we're going to share about some of the monumental shifts in the housing market today. And how we as a company are really positioned at the center of these changes.
And we're also going to share with you our unique approach to building community in an environmentally friendly way. We'll introduce you to the three housing types and show you why they're so popular with this new kind of homeowner.
We're going to outline our track record and talk you through and share some of the existing projects and how you can be a part of this both financially and philosophically. By participating in the Hiatus Capital Fund.
So let's get started. What makes us different? At Hiatus Homes, we really believe that there's a movement that's happening right now in housing, and this is going to change how our cities look for the better now and into the future. So people are wanting smaller, more efficient, and environmentally friendly homes.
Yeah, that's right. So almost to kind of back up. So much of the current US housing is sprawling suburbs. And although the suburbs appeal to a certain type of demographic of homeowner, large swaths of the population have a very different preference in housing. All this focus on developing sprawling suburbs has created a housing crisis where the US is short at least 3 million homes nationally. One of the ways we're seeing the effect of that is in housing prices go up as much as we have over the last 2 years. And then also because of the low density and large home sizes of the suburbs, these homes tend to be very expensive for the 80% of households that are really non-traditional families. We'll get into that in just a moment. But a lot of these non-traditional homeowners, they prefer smaller spaces, higher density, and a mix of community spaces mixed up with shops and businesses.
So if this is what the market wants, why isn't there more of it? And that's a great question. So after World War II ended, the 3-bedroom, 2-bath house was born. At the time, most of the families buying homes were made up of a wife, a husband, and 2 kids. So that's the kind of houses that got built for a very long time. This lasted, even into the 70s, we were still at 40% of all the households were still nuclear families.
But today, nuclear families account for only 20% of America's households. It's half of what it was 40, 50 years ago. Well, the other 80% is mostly made up of 2 or less people. And this is really a growing phenomenon across all ages and all incomes. The housing supply has been very slow to meet the demands of who's really buying houses these days. The new group of home buyers include a varied mix of living arrangements from roommates to single parents, to couples without children, even single people acting as a caregiver to their aging parent. So when we go back to our original question of why aren't more houses being built for this change in demographics? Well, one huge hurdle has been zoning and building code. In the past, building several small homes on a residential lot instead of one big home was not allowed. Also, building code didn't allow for a lot of innovative ways small home designers were utilizing living space. Things like sleeping lofts, ship ladders, storage stairs were often illegal. Another one of the main reasons innovation has been constrained is because the supply of housing is low. So frankly, most builders and developers were operating in a seller's market and didn't need to change what they were building.
So basically, if they could still build what they were always building and it was still selling, then why should they change? So now we've come along. So all of this is changing in Hiatus Homes. We're pushing that change by designing and building these new housing types and working with the city and the state to get codes changed that actually incentivize the type of houses that we're building. So we're now supplying that type of housing that's truly needed and wanted. So with all of our projects, we ask ourselves, what's the best design for this particular piece of land in regards to the eventual residents and the surrounding community? How will these homes and this development fit into the rest of the neighborhoods and the rest of the city?
And so what are the results of this type of housing? Well, we essentially have four pillars in our approach. We focus far more than a typical builder on attention to detail and design. This goes from the room all the way up to the home, to the neighborhood, to the whole development. We pay attention to energy efficiency. More on that in a minute. We really set our homes apart with smart home technology. We want living in our homes to be really an experience and interact with technology. And then lastly, a really key part of our developments is we can get between 2 and 4 times the density of a traditional development.
So we concentrate on just 3 housing types that serve this missing demographic of buyer we're talking about earlier. So the first one is our Hiatus Studio. This is a 600 square foot cottage that takes advantage of new building code that helps us to maximize the space. It has an open kitchen, living room with storage stairs that lead up to the bedroom loft, which includes a wardrobe and various drawers and shelves. On the deck, we've integrated storage benches and even have a bike box to put your bike in. So who's buying these houses? We have retired people, couples, some are second homes, and even investment property that's being rented out. And our second model in the lineup is our Hiatus 2-bedroom. This model is really for anyone who needs a little bit more space than the cottage or the studio provides. So we basically took the cottage design, we added another bedroom, another bathroom, and a garage that's fully finished and can function as kind of like a flex space. It can be used as a workout room or an office. And this is still a really efficient design with a really small footprint. It's 910 square feet of living space, and the garage is just over 300 square feet. So that's a total of right around 1,200 square feet, and that's well under the average American home, which is around 2,600 square feet. The other thing that we accomplished in this design in the 2-bedroom model is a net zero ready home. So this means it's wired and it's ready for the homeowner to add solar panels. And when they do this, the solar will supply all the energy the average resident uses. We also added a spot for an electric vehicle charging station. So this design should get that homeowner much closer to being carbon neutral.
Our next building type is the Hiatus apartment. And the way we really think about this is we basically took our cottage design and stacked 40 units into a 3-story building. We really want you to think of this as a cottage development, including the community spaces, co-working spaces, but all that put together into a high density building instead of across a larger parcel of land. It's so unique. We really think this may be the future of high density. On each floor, there's a kitchen and a co-working space. There's a community garden on the roof. And this model really appeals to the remote worker, especially, which we're seeing just a huge demand for, and a huge amount of these, both in Bend, but in a lot of communities these days.
All right, so let's get into our projects. We're going to introduce you to the projects that we've completed, the projects that we have under design and development right now. So our first project, that was Hiatus BENHAM. And this development was the first to use the cottage code that was adopted by the city in 2015. It consists of 22 of our studio cottages arranged in 4 housing clusters. So these clusters are kind of like half circles that then face into a shared open space. The cottage development is designed to facilitate the connections between the residents. So we did that by connecting community gardens, our pond, and the other open spaces by these shared pathways.
This development was a huge hit. It was really well received by the community of Bend. And, kind of relevant to our fund conversation today, was a big financial success for investors. It generated over 20% annualized returns, with many investors doubling their money in a little over 2 years.
Our next development, so in Hiatus BENHAM, the cottages were 50% more efficient than a code-built home. And a couple even had solar on them, and one we did get to net zero. But in our next development, we really wanted to take it to the next level and make all of the homes net zero or net zero ready. So Hiatus ROANOKE consists of 10 of our 2-bedroom, 2-bath houses. It's located in Bend in a really desirable west side location. It's got really great views of the Cascade Mountains, which you can see from the 2nd story deck with the full panoramic doors. phase one sold out very quickly, and we just sold out phase two. So this thing's completely sold out. These houses are beautiful. They're selling for a couple $100,000 more than we even thought. So it's been really successful as well. So these two developments have generated a mailing list too that's over 1,000 people long. And we get multiple emails a week looking for more of this type of housing.
Okay, so let's kind of transition to our current projects that are in process right now. So after the success of the BENHAM project and the ROANOKE project that Jesse just described, we created the Hiatus Capital Fund. And really the purpose here was in order to efficiently capitalize a series of development projects. We weren't trying to do just one at a time. We wanted to put, basically stack and ladder several projects. And the first of those projects in the portfolio is Hiatus Roosevelt. This property is just over half an acre. It'll consist of 7 lots total. On each lot, we combine our 2-bedroom model and our cottage, and we tweaked them slightly. We moved the garage on the 2-bedroom and put it underneath the cottage, which now serves as the ADU, or kind of like an old school mother-in-law unit. And so now our 2-bedroom model is actually a 3-bed, 3-bath, because we converted what was the garage into that 3rd bedroom. But it's still only around 1,300 square feet of living space. So we're able to still be really efficient and small in our space. And on this project, the fund owns the land. We will start moving dirt and creating our lots in the next month or so. So this project is essentially done with design and is moving forward. We're breaking ground. This project will be completely finished in about a year and a half. The next one in the portfolio is the Hiatus PENN. This is the apartment project that I mentioned earlier when I was talking about our apartment model. This is a 40-unit apartment building in Ben's Orchard District. It includes these shared kitchens and living room spaces. We have a gym, a conference room, plenty of co-working space on each floor. And again, the point here is we basically took our cottage design, our cottage community design, and put it into an apartment. So again, similar to Roosevelt, the fund owns the land free and clear. We're currently in the entitlement and design phase. Everything's going really well, no hiccups there. And we expect construction to start in March 2022. And before we move on to our 3rd project, which we just started, new investors coming into the fund right now get to be a part of those 2 projects. ROANOKE and PENN and 9th, which Jesse is going to go through.
Yeah, and PENN was approved by the city. Our entitlements are approved for that, and so we're just working on our construction documents right now. Okay, Hiatus 9th. So this is in design, meaning that we've had a pre-app with the city, we have the land, and now we're doing the design for the lots. This is going to have basically our cottage, 2 of our cottages on each lot. So as you can see in the rendering there, one of the cottages will be up on a garage, but you'll own both of those cottages. So this is a really unique design. It really maximizes our density. It provides a lot of flexibility for buyers. They can, rent a unit, and it's also like a multi-generational housing for a family. So we're really excited about this one. We're in the entitlement phase, as I said, looking at completion on this in 2024. So that's all the projects that we have currently. We probably look at, I don't know how many pieces of property
like
a
4
month,
or 5 a month,
4 or 5 a month. But we have a really diligent process that we go through to make sure that it works for us and it works for our investors. So we have a couple things that we haven't mentioned that are in here. They're not officially in, but we have a couple other projects that we're looking at currently. So one of the great things, that first development, I was kind of on my own. Ryan was there helping me with performers and stuff, but our team has just really grown to support all the work that we're doing now. Ryan Buckstein, he's our new marketing guy. He's a really amazing person. He comes from Ace Hotel in Portland. Jeff Akers is our project manager, just doing a great job of keeping all the houses going. Our design team for residential, Mallory and Christian, married couple, and just do awesome work. They do all of our design work and have been with me since we were doing tiny houses on wheels. So and then 10 over out of San Luis Obispo, that's now here in Bend, doing our micro apartment. And then our land acquisitions, Mary and Darren have been just doing a great job of getting a lot of land in front of us so we can analyze it and look for some more projects. And then our home sales have been really amazing. Yeah, things have been sitting on the market for only like a couple of weeks. So that's been great to have that team and be able to have it as support to be able to expand into the future. So yeah.
Okay, we want to give a quick description of the business model and the real estate development process for those that haven't done real estate development, and maybe want a little primer on how the overall process works. So there's basically a series of phases here, and as Jesse and I kind of quipped a minute ago, we look at 5 or more deals per month. This is like a pretty in-depth financial analysis and pro forma. We work with our engineer, and so we're trying to figure out stuff that's a fit for us. One of the advantages we have is that density I mentioned earlier, and this deal pipeline is sourced from a lot of different sources: investors, partners, realtors, or just internal relationships, people that know what we do and come to us. And so we've started to see even landowners that own a piece of property come to us and say, hey, we love what you guys are doing. And so when we find a project that we like, we move into the land holding period. There's often a period where we ask our seller to hold the piece of land for us, while we start to work through the design and basically make sure we've got a good project here. Sometimes we have investors or partners that do what's called land banking for us. So they might buy the property or hold the property for a year while we do our design and work through it. And then we basically acquire the land. And this is where the fund really comes into play here. So the fund uses capital from investors to acquire the land. We do that in cash. And so that we own our land free and clear. You heard us talk about that a couple times earlier. And then we really go into that design and entitlement period. Once we are getting close to construction, we go out and work with specialty construction lenders. Sometimes we talk to banks and we get a construction loan for the actual construction piece of the property. The fund is still the owner of this land, so the fund keeps its capital in that it bought the land with. Construction loan comes on top of that. And then at the end of that, we sell these homes out. And we have a pretty unique home selling process where we really are brand forward. That created a waiting list. We've got a huge waiting list from our first couple of projects where people are really looking to buy a Hiatus home, and then they're in some cases waiting till our next development till they can get another Hiatus home. And so we've really built kind of a strong brand there. So the 5-year plan, a lot of investors want to know kind of where our head's at or where this is going over the next couple of years, what our goal is. And so essentially our 5-year plan is to build 400 homes. This is most likely all going to be in the state of Oregon for reasons we'll get into in just a second, some regulatory reasons. And there's just so much demand here. We're 1 year into the 5-year plan. And so we actually have 77 homes currently that are kind of in the fund and in process toward this 400. And, but we're looking to basically increase kind of a new project once a quarter. Ultimately, then we would have a liquidation event, hopefully every quarter. And so that's kind of what we're hoping to grow to as far as the future of the fund. Lastly, we can get into this more kind of in some follow-ups. Today's presentation is really just trying to be an intro. Investors that are interested in being part of the fund and what we're doing really need to read through the PPM and the offering documents. But there's 3 really important pieces to understand about the fund: how you get in, how you get distributions, and how you get out. And so just real quickly to touch on each of those: how you get in, we basically have quarterly closings. Every investor needs to be an accredited investor, and every quarter the unit price or the share price goes up a little bit, or at least changes a little bit. It's almost like a stock that's going up as the value of the underlying real estate in our fund's portfolio goes up. As we buy more and as we improve the property that we have, the share price for new investors goes up to reflect that increase in value. So that's how investors get in. Once investors are in, they get distributions every time we have a liquidity event. Now, the liquidity event is when an entire project sells all the way through, or if it's a larger project, a whole phase sells through. But we don't do a distribution for each home that sells. We basically, kind of group a whole project together, run our profit calculations, and then send out distributions. These might be, once or twice a year initially, and then kind of growing to quarterly or so once we have a lot of projects in the portfolio. It's a couple of fees. We tried to be very straightforward on fees and align our fee structure with value creating milestones in the fund. We also sought to essentially cut our fees in half as compared to a lot of typical developer fees and push everything, as far as our team's compensation to profit splits on the back end so that we are aligned with investors. We don't have a preferred return. We basically push everything into a profit split. And the profit split's a little better for larger investors. And that's just basically to reflect an incentive for investors coming in at a larger investment amount. Now, lastly, the last piece of it is, how do you get out of the fund? So the fund is an evergreen fund. That means it's kind of like a mutual fund in that investors can actually leave the fund, but other investors stay in. And so how that works is an investor notifies us they want to redeem their units. And so they can do that after 2 years. And then we can give them their original investment back after a liquidity event. Otherwise, if they haven't asked for their money back, we continue to roll that original investment into future projects. And they basically maintain an ownership in the fund and just get payouts from everything for as long as that goes. So a lot of details there we can get in a follow-up call after you've read through the PPM, but that's a highlight.
Okay, so after all this, why should you invest in this fund and invest with us? I think the first reason and the biggest reason is we're supplying a new housing type and building philosophy that's been really underserved in the past, as we were showing, and it's really in high demand right now. So these small, efficient, beautifully designed homes, they just really stand out in the market right now.
The housing market, like I talked about at the beginning, largely because of a shortage of inventory, home prices have been surging month over month, breaking new records, it seems like, constantly. Matter of fact, in Bend, where we're primarily located, the inventory continues to go down while housing prices go up. Since this time last year, we've seen almost a 30% increase in the cost of a house here in Bend. So for example, the last couple of months, several of the Hiatus BENHAM cottages resold for over $400K, which is almost double what they sold for when we were selling them out the first time. So we're seeing the same thing in Hiatus ROANOKE, major increases in price. So there's just a lot of pent up demand for what we're selling. And, we're really inviting our investors to be a part of that opportunity. We didn't talk a lot about returns. We are targeting 15 to 25% return. So we're targeting a high yield. And a lot of that's driven by this, just extraordinary demand in the housing market.
Yeah, and as boring as it is to talk about, code changes are one of the main things that's giving our company the advantage when we look at new projects. So in Bend, we now have 4 different housing codes that support small dwelling types that we build. And these codes give us an advantage in 2 main ways. One is density and one is the city fees. So on a residential lot, you're normally allowed to build 7 houses per acre. Because of a code change that we really fought for, we can now build 28 of our 600 square foot studios on that same lot. So just a huge advantage in the density. Another big thing that's really helped, supporting these smaller units is the city has reduced the amount we pay for what's called SDCs, or system development charges. So for an example, on the apartment project Hiatus PENN, if we were going to build a standard apartment, our SDC fees would be around $30,000 per unit, or 1.2 million. These fees are now assessed based on the unit size and based on that density calculation. So the cost for our smaller units is $7,500, or around a total of about $300,000. This makes this project pencil really well, and it saves almost $1 million just in city fees.
So another really important piece of the puzzle here is regulatory changes. So one of the most important pieces about like a high momentum business, as an investor investing in the trend, is looking at what's going on in the regulatory changes. So the state, especially where we are, Oregon, is making major changes to support smaller, denser housing. House Bill 2001, which passed last year, requires all cities with a population of 25,000 or more to allow cottage cluster developments on residentially zoned land. So you can now build smaller and denser on any residentially zoned land. And that is a huge regulatory shift. This is not just statewide, nationally. There are some major policy proposals that would reduce or even eliminate the most persistent factors in depressing the supply of housing. That includes exclusionary zoning laws, minimum lot size requirements, minimum square footage requirements, unnecessary parking requirements. So we're just seeing tons of support for what we do at the regulatory level and really at all levels of government.
So thank you guys. And, I hope that you'll join us in trying to make our cities more livable, make the planet cleaner. And in the end, hopefully this makes us all a lot happier. So I'd like to open it up to questions. If anybody has any questions, you can throw them in the chat there.
Yeah, throw them either in the chat or in the Q&A, and we'll kind of answer some live. Right now, we can also follow up over email or with follow-up call if anybody needs to hop off.
Let's see. So yes, I'll share the recording. That's no problem, Lonnie. Are we pre-selling Hiatus 9th? We're pretty far out on Hiatus 9th to pre-sell. If we do pre-sell, we usually only do it kind of one lot at a time. After we have our model house and we're starting to work on the second house in the development, we'll sometimes pre-sell that second house. But the answer is, at least for Hiatus 9th, not right now.
Another kind of more technical question, although this is a very common question. Can I use 1031 exchange funds from another property into our fund? And unfortunately, the answer is no. When an investor comes into our fund, they buy units, they buy ownership units in a company called Hiatus Capital Fund, LLC. It's a Delaware limited liability company. So our investors own a piece of that company, and then that company owns all the land and develops it. And so it's not qualified for 1031 exchanges. However, we do very often work with our investors that are also invested in our fund with 1031 money. Like I mentioned earlier about land banking and how some of our investors will buy and hold land for us, and that's fairly common. So if we have an investor with a chunk of capital from a 1031 exchange, we might say, hey, buy this piece of land for us, hold it for a year while we do the design, and then the fund will buy it from you a year from now. And so it becomes a way for investors to roll that 1031 money over. They're compensated with long-term capital gains in most cases for holding that land. It's kind of a great program. Happy to talk about that for investors that have a chunk of capital in 1031 money. Talk about some of the risks applicable to the investment. We've got a couple different views. We can think about that. Of course, like the primary risk is this is like a real estate and housing investment. And so it's the risk of real estate and housing. Is the trend that we basically spent the last 25 minutes describing of home buyers going towards smaller homes and the homes that we're trying to build, is that going to continue? Is it going to stop? There's obviously a lot of macro factors there with interest rates, mortgage rates, and just kind of the general housing market that could cause a slowdown. One of the ways we mitigate that is when we buy our land, we try to always own it free and clear without debt until we're ready to basically start construction or push dirt.
This is one of the major reasons we started the fund, was for that really risky period that we have, that any developer has, is in the dirt. And that's when we saw a huge downturn here in Bend. That was a lot of what crushed a lot of people, was they had dirt that they couldn't sell.
They couldn't sell with a lot of leverage on it.
Right.
And so they couldn't hold it either. They couldn't sell it and they couldn't hold it because they had monthly interest payments to a lender that ultimately foreclosed on all those lots. And that is a lot of what we saw in 2009, 10, and 11.
Looks like we have another question here. Hi guys, I love the projects. I live in Bend and have seen lots of controversy over parking. There is a lot of controversy over parking. seems like most of these have 1-car garages. Given that most couples seem to each have 2 cars, where does the second car go? Well, for instance, Hiatus BENHAM, each of those cottages has 1 parking space per cottage. There's also another 7 parking spaces that are guest parking spaces, and then there's parking along some of the street there. In Hiatus Roanoke, there is a 1-car garage, and then the driveway actually can fit 2 cars. So on your lot, you could fit 3 cars there. Again, on that development, there's also street parking. We put in a huge 36-foot wide street in front of our development. So there's tons of parking on the street. The micro apartment is a little bit of a different story. Part of that, that code allows us to have less parking. So we have half a parking space per unit. So we'll rent the parking spaces out. There's also on-street parking. And then that's on a really nice transit line. We're also gonna have some electronic bikes that are owned by the apartment that are available for residents. We're even trying to have a zip car type car that's there for the residents. So we don't look at it in the apartment as reducing parking, but just switching the type of parking. So it's not just all car parking. Yeah.
Great questions. Yeah, what else? Feel free to shoot other questions into the chat box. Okay, what about expanding beyond Bend? This is probably our most common question. So yeah, Jesse, why don't you kind of talk through our plan?
I think, Bend has been really good to us so far, and we have, we have all the relationships at the city and the relationships with our subcontractors. So Bend is a really, easy, it's never easy, but easier place for us to build. We still think there's a lot of good projects to do here. As Ryan was talking about, this House Bill 2001 that was handed down from the state is requiring cities 25,000 or above to have cottage code. So that's being implemented right now. So we do see moving outside of Bend into somewhere like Eugene, Portland area, to be able to do these cottages, I think would be probably our next move. We also look, maybe in more of the 4 or 5 year plan as we get towards the end of that, looking to look outside of Oregon. When we look outside of Bend, though, the thing that's really important for us is to have a partner that's in that other city that has the same connections to the city and to the community there that we have in Bend. So we would look for that person to be the person on the ground that we then bring the design, we bring the budget, we bring lists of materials, calendars, and then finally capital. But that's how we look at it over the next 5 to 10 years.
Mm-hmm. Awesome. All right. Well, thanks everybody. So here's kind of what to expect from here on out. So our next fund closing, like I said real quickly earlier, we have quarterly closings. So our next closing is December 31st. So to invest on, to have your investment live basically on January 1st, we have to have your documents, your letter verifying that you're an accredited investor, and your capital wired all prior to 12/31 of this year. And so we have plenty of time, but with the holidays, it always gets a little crazy. So we can start working forward on that. We do have a fair amount of commitments for this quarter. Our target raise is about 750,000. We have about half of that, maybe even a little bit more than half of that already kind of verbally committed to us. So if you are interested, let us know right away, because we could fill up this quarter. We have to be careful about how much capital we take at a time. And so we will have another raise on March 31st. But for investors that are ready and want to get in now, we can get started on your paperwork. So here's what I'll do after this, after the webinar, the next 24 hours, I'll send everybody that attended an email with the PPM, and then with a link to our kind of larger investor room. The PPM is a large 100-page document you can read through. It's all about the fund, risks, legal disclosures, security disclosures, and everything. But the first 18 pages are what's really important. That talks about like the meat and the structure of how the fund works, how you get in, how we distribute capital, and how you get out. And so those are the most important pieces to understand. I'll send that out, and then I'd say let's schedule a follow-up call, probably right after Thanksgiving. We can answer technical questions that you have, and really then kind of move toward DocuSign documents at the beginning of December, wiring funds, and everything beyond that. So if you have specific questions, feel free to proactively reach out to us. You should have our emails, Jesse at Hiatus Homes, Ryan at Hiatus Homes.
There's the contact info.
Yeah, contact info, or jot our
Yeah, and
numbers
feel
down,
free
send
to
us a
just
text.
to call, text, whatever. We're always happy to talk with everybody.
Yeah, if you want to maybe make a larger investment, more than 100 grand, send us a note so we can reserve that amount in the fund for you. And we'd love to get going on that. Otherwise, look for that email from me, and we will talk. Hope everybody has a great Thanksgiving.
Thanks, everybody. Have a great day.